night, good night, good night. We are here again with another market outlook. So we are going to look at some currencies, oil, commodities, right? So, and any asset you guys want me to look at or give you my views on any asset, I will gladly do so.
References from home interface. Systems are now fully operational.
Yes. Alright, alright, alright. We are here again in another market outlook. This is a nice little community where I'll give you my thoughts and my views on the market, and also tell you about the way our or the way our trade, right? I'm a currency trader, but I also trade oil, commodities, even stocks also, right? So, and right now, this is the basic layout where I have where I scan the market. The reason why I have it like this so small is because I just need to see what is the general trend of the market, right? And I'm a trend trader. I tend to go wherever the trend is going. I don't try to go against the trend. So we know that we are in a risk. We know that we are in a risk off moment in the market. We are in a risk off moment in the market, right? So I have the Aussie yen to the extreme left right here. Let I highlight this. Right here I have the AUD Aussie yen right there, one of my favorite asset, right? And I have the dollar CAD, WTI, I have gold right here, and I have euro dollar, and I have pound dollar, right? So this is how I really scan the market to see the trend, what the trend is, so I can just wait for pullback and set up my trade to execute. So this is a basic layout of how I have it. But to drill down into more technical aspect of the trading, I'll often go down. My chart template is set up in a manner like this. I have the 4 hour chart. Check this out. I have the 4 hour chart on the extreme left with with the pivot point that I use, which is weekly and monthly pivot points. I'll increase the size so you guys can see what's really happening, right? And in the middle right here, this is is my execution chart, right? In the middle right here, this is where I execute the positions, right? And in the middle, I use a daily pivot point, right? And these two on the right corner right there, I use a hourly time frame, and right here at the extreme low, I use a daily time frame, right? So the main reason for using the template, set up my template like these, is because I want to be involved in the market when there is some traders, different type of traders. Many traders trade the 4-hour time frame, some trade the 1-hour time frame, some trade the daily time frame, and some trade the 15-minute or the 5-minute time frame. So we can even drill down this one into a 5-minute time frame, right? And this blue area that I identify is where what happened in the Asian session, right? So this just identify the Asian session. This blue box that you see identify, right? So I execute the position on the lower time frame to get a better entry on the bigger time frame, right? So that is basically how I plan out my trade. But many traders stuck in a 50-minute time frame or even a 5-minute time frame. So basically other traders don't get the bigger picture, right? Other traders don't get the bigger picture, what's going on in the bigger picture, right? So with that being said, I'm gonna go on the euro dollar. And remember, I was talking earlier about USD currency getting strong, right? I was talking about the USD getting strong, and I always wanted to sell the euro USD, right? And this is just plain chart right here, plain chart, naked chart. So that just have my moving averages, right? And I explain to you guys why in these risk off cases I was looking to buy the US dollar, even though interest rate has been slashing violently, basically around the world, not just the USD currency, right? It's been slashing right across the board, and I try to sell USD right in this area right here, right? And if you look back into my weekly outlook, I explained to you that my reason why I want to enter it, and I was looking for technical setup. So I try short this twice, and I get break even at once, and I get stopped out at once. So this was reason for this. I expect the US dollar to get strong, but the technical setup wasn't very clear. But I was trying to enter in the market very early, right? So that is why my reason. So I then said I'm going to allow the market to become bearish before I decide to sell. So I didn't trade for a few days. I tried to sell the 3rd of March and the 2nd of March, and I didn't get involved until, where is it? Come on. I didn't get involved until, oh, just a minute. I want to tell you exactly when. I didn't get involved until the 11th. I didn't get involved until the 11th of March. And I'm going to highlight this era right here. 11th. Somewhere right there I get involved. So basically I allow the market to become bearish before I bought the US dollar. In other words, before I sell this currency across the board. And this had to do with trade planning, right? Along with discipline, right? Along trade planning with discipline. So I didn't trade, if I trade the 3rd euro dollar, the 3rd of March, I didn't trade the 4th, and I didn't trade the 5th. I didn't trade the 9th, and I didn't trade the 10th, and I traded the 11th. So this, I didn't trade for a few days. This asset in particular, for a few days, right? Based on my reasoning that I explained to you guys, based on my reasoning. So reason why I really say that is this: many traders don't have the discipline to just sit on their hands and just wait for the proper trade to set up. If you're a bull or a bear, it going up and up, as we can see, right? It was going up and up and up and up and up, very aggressive. The market wasn't bearish, it was bullish, straight across the board, bullish, 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 and you want to sell it. All you have to do, develop the faith, the patience and discipline, and just wait for the asset to set up, and you just execute your position right there and then, right? So that is exactly what I did, and I get the benefit of it, right? So this is just plain chart analysis without using any indicators or anything like that. It's just you plan your trade and you just wait out. As I said before, many traders lack discipline and things like that, and they're not dedicated enough to the trading. They're not dedicated enough to the trading. So this is the result. And I'm gonna drill down into lower time frame and show you guys how I execute my position, right? How I execute my position. So it's just price action. I'm not even going to show anything where pivot is concerned, right? I use pivots also. So let us just clear this up for you guys. Gonna drill down into lower time frame. Gonna drill down into lower time frame. Alright. Here is where I took the trade somewhere in here. And I'm going to highlight it right here. It's easier said than done, right? Well, it going up and up and up. I allowed it to break the trend line, moving average, crossover, allowed it to turn bearish, right? Allow it to turn bearish, and I didn't. But as it break the trend line, I wait for it to make a lower low and then make a higher high before I exit it, before I enter the trade. So just basically something like this. Right here. Right? Right here. Boom, boom, boom. Boom, boom. So when you see it break the trend line and it going down like this, you would say, well, it's in a bearish momentum, whether short term or long term, we don't know. But the principle of it, it meet the criteria of your trade plan. So the next thing you have to do is just do your job, right? So I allowed it to break down, 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 up, 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 sell. First position in, right? So I allow it to break and I set my alert at current price where I have this box drawn. So I was alerted when the price reaches this area, right? And I execute my position on a green candle. I didn't even wait on a red candle. I execute this position on a green candle. Place my stop above and allow it to just do its thing. And I said, I want to enter my next position, because my plan is to execute two positions, right? And I said I need a lower low and a lower high for me to execute that position, right? It went down here, but it wasn't feasible. It didn't fit my criteria. I need a bigger low, and it was too close to my first entry, right? So I didn't take the shot. I allowed it to break down aggressively and the pullback. When it pulled back into this area right here, this was when I execute my position. I didn't execute my position in this one, to be exact, the first time, because as you notice, it didn't come all the way. I didn't get a full retracement all the way back. Let us use something else. This kind of I didn't get a retracement all the way back into this price right here. What it did, it formed right in this area. So I said, okay, if this is the new resistance, if it holds, if price come back up to this area, I'm taking the trade, right? So I executed somewhere right in here. Sell, right? And this is where many traders lack the patience and discipline, and then they complain trading is difficult and trading is too hard. It's difficult, yes, but the reason why it is difficult is because the psychology of trading is the difficult part. A baby can click the mouse and press buy and press sell either way, and they're in a winning trade. But the psychology behind trading, that is where the challenge is, and many traders don't have what it takes, and they are not fully committed to the business to make it as a professional trader, right? They enter in the business with the wrong mindset, like a cash pot, money machine. I don't know. Right? Them, in other words, them don't give themselves the chance to prove. Them don't give themselves a year or 2 years in the business or 3 years to execute the different market conditions on the third and the fourth. As I said before, they are not committed enough to the business. So they just throw in the towels and call it what it is. Right? But also, they need help. Also, the trading is a skill. It's a skill, just like anything else. It's a skill. You want to become a doctor. Doctor, you need training. Right? You need to become a plumber. You need training. You need training. So I don't know why people come into this business and feel like they can just come into this business and just start print money like the treasury. Yeah? But as I tell you before, it's a mindset that you come into the business with. You're coming in like a cash pot, a lottery. So it end up lead up to failure. Right? And this is it's the next issue, right? Somebody come in, you get a strategy. It's a proven strategy. Whether support and resistance, supply and demand, pivot, moving average, whatever the case may be. Right? And you back test it, but you back test a dead market. The market wasn't active when you was doing your back testing. Right? And the other part that you cannot back test when you're back testing candlestick is your emotions. Is your emotions. The greed, the fear, the panic, the anxiety. All these emotions take place and this overshadow your rational thinking. All of these emotions take away your rational thinking during a live trade. So you get up a strategy, you back test it, and you're forward test it. But guess what now? Many traders, it's when they are doing the forward testing, they're expecting this amazing result and don't take into consideration that you're still in the testing phase. You're in the testing phase. What you did, what you study, what you analyze, you're doing the forward testing. So many traders do back testing and say, okay, this work. Okay, they're a trader now, they're ready to trade because this strategy is proven and this strategy 60%, 70% win rate and whatever the case may be. And they didn't do the forward testing. Many traders they don't even talk about that. Back test, back test, back test. You hear more back testing than forward testing. Traders don't do forward testing. The traders only do, newer traders should I say, only do the back testing. Right? Moving average cross. Support. Forward testing, no. Other traders, forward testing is their live trading is in which they say they are going to trade now. They are going to make it now. It worked in the back testing. That means it is going to work in the forward testing. Now, when it don't work in the forward testing, you say the possible you're thinking that the strategy don't is not working. It's rubbish, and then next thing you back test another proven strategy, and when you do forward testing now, you throw it in the garbage. It's not working. Why? Ask yourself why. Ask yourself why it worked. You see it work back then, and why it not working now. Is me the trader is the issue, or the different market condition with the different time? Ask yourself all these questions. Group yourself or take 100 trade. Don't prove us test a strategy with just 10, 20 trade. 100 trade, 100 trades, 200 trades. Give yourself time. Give yourself that time. Don't cheat yourself. Don't rob yourself. Give yourself that time to grow. Understand. You go in the market this week. You want to be a good trader next week, next month. Just like with school. First farm, second farm, third farm, fourth farm. Then you're ready for CXC or CAPE or whatever. Just with the trading. Whether first year, second year, third year, if you want to do it by months or quarterly, first quarter, second quarter, third quarter, fourth quarter, because the year is split up in 4 quarters. And all them do, you know. So, this is just my 2 cents to help traders, younger traders getting into the business and get the mindset, get their mindset focus and right. Right? It's hard work. And after when you get it, it becomes easy. Just like driving a car. First you drive. Look, almost everybody can drive a car. Almost everyone can drive a car. And them go to the school or them friend or whoever teach them, them learn from somebody. Or them visually see somebody do it and them just probably they take longer and them catch on. But I just give yourself a time. Till you just master the craft, master the driving. That's it. So I'm gonna carry along with my trading journey, and this is some of the reason why 95% traders fail. Yeah? I understand. I totally do. So now, I said, risk on, risk off. Risk off in the market. Safe events get strong. The other currencies tend to get weak. So all you do, look to the charts, wait till the price action set up and just execute. That's it. Whatever your strength is, you work in your strengths and you work in your weakness. And that's why I'm a different trader than the rest. I'm a different trader. I talk about these things I don't just talk about buy here, sell here, buy here, sell here. The real thing behind trading is what I try to elaborate about. Our psychology of trading, our mindset. Key. Key. Right? So if you're having issues, get help, seek guidance, whatever you have to do, what you have to do to make it. There's nobody to blame but ourselves for our success. As we know, you listen to some billionaires story, where they're coming from, where they're going, where they're coming from, and some things like that. It's like wow. My aim is to trade forever until I cannot trade no more. Right? That is my aim. So I'm gonna take 1% risk per trade, half a percent. If I have 10 losing trade in a row, I'll be just fine. Amateur traders, 10 losing trade, they have to double up on the night shift to try fund back their accounts and things like that. Right? So I'm just gonna drill down into some lower pairs. Right? WTI falling. And we understand what the fundamentals behind the price action, what is happening with oil, and what is happening with the economy, and the third and the fourth. Right? Oil is falling, there's lack in demand, less demand, possibly no demand, less demand. Excuse the writing. And also, this is one. And the second one is increase supply. Right? And the increase in supply by the what I say, by the Saudi Arabia. Increase in demand, increase in supply by Saudi Arabia to get rid of, maybe would say, the Russian, Russian, right? To get rid of the Russians, I would say. Some are them in a conflict with their each of what, yeah, they're in conflict with oil, so this is where it is right now. I don't know many traders, younger traders don't remember oil selling for go as low as $21 per barrel. Right? And this oil drop also have to do with strategy and tactics. Right? So it's strategy and tactics. Let me elaborate or explain something. Alright. Check this out. Say you have a business place. Say you have a store. Store. You have a store, right? Let's go to drawing right there. You have a store. You have rent to pay. You have workers to pay. And you have goods. What I say? Goods and services. Just say goods to take care of. Goods and services. Right? Cool. You sell oil for, let's say, oil. Oil you're selling in your store. You're selling oil for, say, $40 per barrel. Dollars per, right. You need to sell oil at $40 per barrel in order to stay profitable, right? In order to stay profitable. Because remember, you borrow money. Yes. Damn. Excuse the writing. Borrow money. Right. Even better. Loan. It's taking up too much space. You have loan. Damn. Or maybe more than one loans. Right? So in order to pay your loans, pay your rent, pay workers, right? And other services, you need to sell the oil, the barrel of oil for $40, right? You need to sell it for $40. Put it this way, you buy the barrel of oil for $20. I'm just trying to be very basic in layman terms. You buy the oil for $20, right? And in order for you to be profitable, you need to sell it for $40, right? So if oil, the demand for oil is $21, right? Right here, $21. Go all the way, $21. And put it this way, let's say it consolidates around this area right here, right? How can you keep your shop, your store running when the value of oil is, say, 20, say $20, say 20, what is now? $26, right? 26, right? Remember, you have loans to pay, you have rent to pay, or say oil mine or oil rig, whatever. I'm just trying to make it as simple as possible. I have workers to pay. You have services, maintenance, electric, whatever the case may be, right? You are not going to be able to sustain your business you're not going to be able to sustain your business or make any profit, right? So what you're forced to do, maybe cut staff. First thing, you're going to cut staff. Try maybe degree. This is decrease. First thing, just cut staff. Maybe you can decrease, use less things as possible. Try use less, whether current, whether electricity or whatever the case may be. You're doing everything in your powers to keep your business afloat, right? So you do all necessaries. Over time, over time, you're not going to be able to keep the store running. You're end up have to close it. You will end up have to close your store because you need barrel to be at 40. You need to oil to be at $40 per barrel for you to be making profit to can pay your loans, pay the rent, pay your workers goods and services, and have money in your pocket or reserve, whichever key, things like that. So this is what really caused business to close where financial crisis is concerned, right? Thanks, thank you. I get better the most, yes. True, man. Me I work on it. Yeah, so this is what drive business to close down, right? So I'm just use this oil chart for example, right? So I hope you guys have a better understanding of how the market really work. And I'm gonna clear that up. I'm gonna draw something real quick for you guys. Real quick. Before I close this show. In everything you have a cycle. We have a cycle, right? And this is, I'm gonna draw this. So, cycle, right? And this is interest rate. Interest rates, right? This is plus and this is, let's start from a minus. It is minus and over here so it's plus. And right here is when interest rate holds. It's not going up or not going down. Hold. So during the cycle, during the interest rate cycle, right? We're having when interest rates are cutting, right? When interest rates are cutting, we are at a contraction. I'm going to use a different color. When interest rates are cutting, are heading into they are decreasing interest rate. We are in a contraction phase. We're in a contraction phase. This is the first stage, right? First phase, right? And then we are in a recession phase. Yes. After we go to the recession phase, then we go to the recovery phase. Right? And then we're up on the whole. When interest rates start to pick up, when things start to pick up, this is when interest rates increase. Right? So, during my trading journey, I know when interest rates keep on steadily rising, I worry. I wouldn't say worry, but I'm concerned when interest rates stop rising. No more rising of no more hiking of interest rates. Right? So when interest rate is rising, this is what is taking place when interest rate is rising. We have put it this way, we are coming out of the contraction recovery now. My bad. We are not a recovery yet. After the recession, we go all the way down to the slump. Or maybe would I say bust. Slum or bust after the recession. So that this is where would I say we hit rock bottom. Right? And after we hit the rock bottom now, then now we talk about recovery. Right? Right. Sorry about that. Recovery, and then now we have expansion. Because we have to recover first before we can expand. Expand. Right? So we are in the expansion phase when the interest rate is in the plus. So I hope this give you an idea of the market cycle. When interest rates are slashing, and probably for the first time you guys, maybe as a new trader, you're seeing the 2020 rate just slashing, everybody slashing rate, you never see that before. This is what is happening. The market it's in a contraction phase, a recession phase, or it's in a slump phase. Right? After all that is passed, then you're going to lead on to the next phase, which is a recovery phase, and then the expansion phase, growth. Right? What factors decide that we are in a slum? Ah, nice. All right. What factors decide when we are in a slum? When there's no money available, there's no credit. There's no credit. You can't get no loan for borrow. Yeah? No credit. Because there's no work or no supply for you to pay back their loans. That's why in 2008, many houses going to foreclosure and things like that. People can't pay their mortgage and things like that. And everybody could just borrow a loan and pay whatever debt you're in. But when the bank say, we can't lend no money because they don't know them will get back their money because everything is slowing down. I hope that explain your give you an answer for your question in a nutshell. In a nutshell. You understand? Let me know if that give you kind of clear up that aspect of it. When money is not available to people, right? Yeah, that is where we at the slum. And then we'll bail out of that and up, 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 up. Recovery, expansion. Right? So this is our help to time myself, time the market. Right? Whenever the Fed or central banks monetary policies start, I'm see the world stop hiking interest rates and just cutting as months goes by, cutting, not good, not good. Currency weak. Only US dollar tend to get strong during rate cutting, and we understand why. And it plays a safe haven as currency, right? So you need US dollar to do a lot of things all around the world, right? So the demand, even when the rate is cutting, the US dollar um, is attractive. Apply the Forex. Can explain how it applies in the Forex market. No, but that is what is happening. That is what you use the Forex factory economic calendar. We use the Fed Watch tool. Monetary policies come out, and we know when the interest rates are cutting, right? We know when the interest rates are cutting. If you watch my reviews, we go to the FOMC watch tool, Fed Watch tool, and we watch other RBNZ, central bank policies. So we just try to keep on top of things. I showed you. I told you before the Fed starting to cut interest rates. Watch my videos. I tell you that, guys, it is coming. It is coming, and I show you how to use the tool. What's the probability of cut, and more cut? You understand? So when I see the cuts and the more cuts coming up, the forecast, I know what I want to do. I want to buy the US dollar. And I showed you earlier on in the euro dollar, and it was going up and up and up and up and up. And I said, I'm just going to wait because I know what is going to happen. I expect the US dollar to get strong. And it did. So this is just some of the things them. This is not everything, but this is some of the things them. That's why my students are well equipped. I try to give them all information they need. So it helps to develop them bias and help with their timing. The timing is also very important. It's not just buy and sell, it's just when. When to buy, when to sell. Understand? So this is how I implement my trading. That's why many times in the Telegram group, I always speak of this and I know what I want to do before I look to my charts. I just look to my charts for technical setup. That's the only thing I look to my charts for. I don't look to my charts for nothing else. Right? I don't look to my charts for nothing else. So we're going to close it here, guys, until next week. And I hope you guys learn something. Right? Hope you guys learn something this week. So peace and thanks for the turnout and the many questions. I like when you come to the session, ask questions. I just try to point you guys into the right directions. All right.